So right now, two sectors have sold off massively. One of them is travel and the other one is energy. And in particular, we have seen massive sell-offs taking place with airlines, as well as cruise lines, casinos, hotels, and other travel-related industries. And if you know anything about Warren Buffett's style of investing, one of the things that he says is to be greedy when others are fearful, and there is certainly a lot of fear and pessimism in the market. Now that being said, guys, there is nothing telling us that this is the bottom. Stocks could definitely fall further, and that is always the risk you run when you buy into a bleeding market. But if you're up for the risk, there could be massive upside with some of these stocks. So what we're going to cover in this video is 3 particular stocks or industries that have been hit the hardest, and then 2 particular stocks that might be a good hedge against said virus. Now, before we get into that, guys, I just have to make this statement that I am not a financial advisor. This is not financial advice, and you should always do your own due diligence before you invest in the stock market or anything out there. But that being said, guys, let's get into the video. Alright guys, so here we are inside of my portfolio. This is the M1 Finance investing platform, and this is my main brokerage. If you guys want to check this platform out, it is great for dividend investors and long-term investors, and they also have expert-built portfolios that are completely free to invest in. I have a link to them down in the description below, and I also have a link to a free 30-minute video training I did that shows you step-by-step how to invest with M1 Finance. Full transparency here, guys, I am affiliated with M1 Finance, so if you do use my link, I may earn a small commission in the process. That being said, guys, the first category of stocks I want to talk about is airline stocks, since that was a new addition to my portfolio, and I bought shares of American Airlines earlier this week. Now, we're going to talk about 4 main airline stocks very briefly and take a peek at the charts. But in a nutshell, all of these airline stocks are down massively right now because of travel fears. A lot of countries have travel bans going on right now, and pretty much nobody is looking to travel right now for vacation or leisure because of fears of contracting the virus. So as a result, these airline stocks have absolutely tanked, and some more than others. And overall, if we look at the market today, this was another very red day in the market. I'm recording this on Thursday, and as you can see here, we had another big correction in the stock market. The Dow is down about 3.5%, S&P down about 3.5%. This has been another very red day in the market, and a lot of these airline stocks have just tanked today. So let's go over a couple of these now. So the first one here is American Airlines. This is the stock that I purchased, and if we jump over to my portfolio quick and look at my holdings, I'll show you guys, just to be transparent with you, I bought shares at a cost basis of $17.84. So right now I am down about 10% on my shares of American Airlines. And this is what you might run into, is that even though the stock is down massively, there's no saying where stocks are going to go in the short term. I just know that I personally believe American Airlines is worth a lot more than the current valuation of the market, but in the short term, I have no idea where that share price is going to go, and if it continues to fall, I will simply buy more stock and average down, because I would love to own even more of this stock. I have a very small starting position here of around $2,000. But if we look at the last 6 months here, American Airlines stock is down 33%, and this is a stock that has a PE ratio of 4.7, which is extremely low, and they are a dividend payer. Now, we're going to do more of an in-depth analysis of American Airlines in my next stock portfolio update, so we're not going to cover much about them right now. I'm just going to make you aware of a couple of these airline stocks that have fallen massively in the short term. Next up, we have another massive airline here, Delta Airlines, currently trading at a PE of just 6.3 with a slightly higher dividend yield. And over the last 6 months, this stock has not fallen nearly as much, but they are down 16.65%. One of the reasons why American Airlines has fallen so sharply is because this company has a pretty sizable debt load, which makes them a higher risk play. So that's why I personally bought American Airlines. I feel there's more upside, but there's also more risk because that company has more debt, which means in a bad economic condition, This company has a lot more debt that they are servicing than these other airlines, which means these other airlines are in better shape financially. However, that makes them less risky with less potential upside, in my opinion. Next up, we have another massive airline here, United Airlines, trading at a PE of 5, which is closer to American Airlines, but slightly more expensive. And over the last 6 months, this stock is down just about the same as American Airlines, down 30.72%. Now, I'm not familiar with United Airlines. I'm not sure what the debt load of this company is. I would have to take a peek at the balance sheet. But if you are looking to buy an airline stock, these are the common ones people pick. And then the last one on the list here is going to be Southwest, which we'll take a peek at now. And this company trades at a PE of 10.6. Now, this is a fantastic company as far as their track record, and they're one of the best companies out there as far as their operating history and their dividend history. But as a result, they trade at a pretty high valuation. I'm not saying high in terms of the market, but if you look at this stock compared to other airline stocks, it's about 2 times as expensive as American Airlines and United Airlines based on that PE ratio. But that being said, even this stock fell sharply today, and if we look at the last 6 months here, they are down 10.64%. So I personally went with American Airlines because I see more potential risk, but also more potential upside. Whereas if you're looking for a more conservative airline pick here, you might want to consider Southwest Airlines or Delta Airlines since they haven't fallen as sharply. Okay, so next up on my list here, the second group of stocks to consider is these cruise line stocks because they are down massively. You have Norwegian Cruise Line, Royal Caribbean, and Carnival Cruise Line. Probably not a stock or industry I'm going to invest in personally, but it is an area that has sold off massively, and the reasons are pretty simple, guys. There was a virus outbreak on a major cruise line, and as a result, pretty much every one of these cruise lines has canceled cruises that were bound for Asia, and I don't know anybody right now that's chomping at the bit to get on a cruise. So again, it's concerns about the future headwinds for this company based on people's fears of travel. These stocks have sold off massively. So if we look at Norwegian Cruise Line here, over the last 6 months, they are down 36.91%. Currently trading at a PE ratio of 7.8. Next up, we have Royal Caribbean trading at a slightly higher PE ratio of 8.7, and boy was this a nasty day. 16.29% down today, and over the last 6 months, this stock is down 25.79%. So this stock hasn't sold off as much over the last 6 months, but it also has, I mean, if we look at the last 3 months here, it's been even a more substantial sell-off because they had a bit of an uptrend here. But yeah, over the last 3 months, they're down about 35% in a similar trading range as Norwegian Cruise Lines. And then finally, we have Carnival Cruise Lines here down 14% today, and over the last 6 months, they are down 28.04%. So between airlines and between these cruise lines, you pretty much have a 30% sale going on, maybe even more with some of these companies based on the debt load or unique characteristics of each company. And based on your risk tolerance, you may want to go with one that has sold off massively, or you may want to be more conservative and pick one of these companies that has a better financial situation, based on their balance sheet. But the general idea here with these airline stocks and with these cruise lines is that these fears of the virus are going to blow over at some point, and we are going to see it under control. And so long term, the values of these companies should not be affected. So you got to ask yourself, do you think that, American Airlines is 30% less valuable than it was, 6 months ago? If you think it is, then it's not a stock you would buy. But if you're thinking that this is just a overblown sell-off here, this is where opportunities could lie. All right, moving on for the third stock, I just have one company to mention here. There are a number of different stocks you could purchase involved in the oil and gas industry, but I chose ExxonMobil because they are on the Dow Jones Industrial Average. I don't personally know much about this company. It's another industry I'm just not really a fan of. I don't know much about it, so I probably wouldn't be a buyer, but this is a stock that has sold off massively over the last couple of years, and it now pays a dividend of upwards of 6.5%. And right now, as crazy as it sounds, ExxonMobil is trading at about a 15-year low, which means this stock has really been battered in the last couple of years and even over the last decade. If we look at the last 6 months here, this stock is down 25%, and we can see there was a pretty sharp sell-off here as soon as the virus fears spread, and the reason behind this is pretty simple. With the disruptions in trade and the fear of traveling, well, that's going to cut down on consumption of oil, so that could create a surplus on the market affecting oil prices. So these things all kind of snowball together, and that is why we saw the oil industry, the energy industry, and the travel industries really hit the hardest because they are all related to each other. All right, next up, number 4 here. Here's a stock that could actually do well based on sales of the medical masks. So as I'm sure you guys have seen, medical masks are in a massive shortage right now. You have people trying to sell them for, $20 to $30 per mask on Amazon. We see price gouging going on. But a company that will benefit from this is 3M. They are the largest manufacturer of these medical masks. And multiple articles have said that 3M is ramping up their production, but they're still unable to meet that demand. And this stock has sold off, over the last 3 months. It's down, 6%. Over the last 6 months, about the same. So this was a stock that was trading in recent years over the last year at a high of $220, now down to $150 per share. A pretty solid dividend payer, and they're also part of my investment portfolio. Now, 3M is involved in many different cyclical businesses, and they are going to be hurt by some of this easing of trade and not as many people out and about. But they are going to do well and certainly sell more masks than anticipated. So this could be an interesting hedge for someone who's looking to buy a company poised to do well in the current conditions. And then lastly, guys, I have one more stock here, another hedge against the virus concerns, and that is the Clorox company. And this is evident right here, guys. The market sells off 3.5%. Clorox stock is up almost 2%. And if you look at the last 6 months, I don't even know if this stock is down. In fact, they're not. Over the last 6 months, they're actually up 6.3%. And that's because people are diving into this stock because they realize that as people are concerned about the virus spreading in germs, well, what are they going to be buying? They're going to be buying Clorox bleach, a known chemical that can kill this virus and other germs and other products that Clorox owns. So if we do see this virus spreading across the United States, we will definitely see more sales of cleaning products, which could definitely benefit the Clorox company. But anyways, guys, that is going to wrap up this video. I hope you enjoyed it. Of the stocks I mentioned in this video, the only ones that I own are American Airlines, and I also own 3M. Like I said, I don't know a lot about the cruise lines. Probably not a stock I would buy personally. Same thing goes with ExxonMobil and other oil and energy stocks, but they are industries that have sold off massively right now, and it may be an area that you want to consider investing in. Let me know what you guys think about this down in the comment section below. I would love to hear what you guys think. Like I said, if you want to check out that free training for M1 Finance, that is down in the description below. But thank you so much for watching, guys, and I will see you in the next video.